Well, first of all, HKMC has signed 20 MOUs with partner banks and potentially more. And our business model or mode of operation is principally working with banks on a primary and secondary basis. We aim to complement the banks rather than competing. So I would say that our investment process is not too dissimilar from the bank. And the only thing is we don't really interface a lot with the clients unless we do bilateral deals, which we have done some as well. But banks tend to do underwriting, and we tend to interface mostly with the banks. But on the investment process and due diligence side, I don't think we are too dissimilar. I mean, we have a risk officer that conduct the parallel due diligence with us. We also have our own S&P off-the-shelf rating model. I think bank use their own proprietary model, which we don't have. But when we are looking at assessing project finance deals, we'll typically look at, for example, the country risk, the regulation, the industry, the sponsor credibility, the contractual risk. And within the revenue contract, we have to understand how the individual revenue is being structured and what is the termination regime, what is the force majeure clause, and what is the risk allocation. And on top of that, the financing term we need to be comfortable with. What is the buffer on the DSCR and DSRA? And what is the step-in right? Do we get security? And what is the cash flow waterfall? So these are very common for any project finance banker. And on top of that, if the asset is under greenfield or construction, of course, we have to know how complicated the construction is and who is taking the risk. Is there a sponsor rep? Is there an EPC guarantee? So a lot of that will take that into consideration. I think generally, for example, data center and renewable have got a relatively less complicated risk compared to, let's say, building a tunnel or toll road. You have to build a tunnel. Those tend to be constantly getting cost overrun and delay. On top of that, I think increasingly all the banks or non-banks as well also focus on ESG. So we tend to follow Equator Principle with reference to IFC performance standard. And we also have our own SGS framework, the social governance, social green and sustainable framework. And we have charted our decarbonization pathway as well, with reference to the Hong Kong Climate Plan 2050. And we also have our own climate risk tool to assess the climate risk of each transactions.